In the arena of global power, the United States and China face off, their rivalry shaping the fate of nations everywhere. This is more than a trade dispute, it's a battle of systems, with the future of global cooperation at stake. As tariffs rise and deadlines approach, the world economy teeters, supply chains strain, and uncertainty spreads from Iowa's fields to Shenzhen's factories. The choices made in Washington and Beijing now will echo for decades, affecting jobs, prices, and the world our children inherit. Today, we'll unravel the roots of this conflict, its impact on key sectors, and what it means for the global order. The world isn't just watching, it's participating in a drama that will define the 21st century. The US-China economic relationship began as a partnership that transformed the world. In the late 20th century, as China opened its doors to global commerce, the United States saw an opportunity to engage with a rising power. Early trade agreements laid the foundation for what would become one of the most significant economic relationships in modern history. After China joined the WTO in 2001, American consumers enjoyed cheap goods, while US companies profited from China's vast market. The flow of products and capital between the two countries accelerated, fueling economic growth on both sides of the Pacific. American retailers filled their shelves with affordable electronics, clothing, and toys, while Chinese factories boomed with new orders. China's growth lifted millions from poverty, and the two economies became deeply intertwined, chimerica, as some called it. Urban skylines in China transformed almost overnight, and a new middle class emerged, eager for American brands and lifestyles. Meanwhile, Wall Street and Shanghai's financial centers buzzed with cross-border investments. China bought US Treasury bonds, financing American debt, and the world saw this as a win-win. The US could borrow cheaply while China found a safe place to invest its growing reserves. This financial symbiosis became a pillar of global stability, at least for a time. But beneath the surface, tensions simmered. US jobs vanished, manufacturing declined, and concerns grew over China's trade practices and intellectual property theft. Many American workers felt left behind as factories closed and entire communities struggled to adapt. Allegations of unfair competition and stolen technology began to dominate headlines. The trade deficit became a political flashpoint, and quiet cooperation gave way to confrontation. Politicians on both sides accused each other of breaking the rules, and mistrust deepened as negotiations grew more contentious. The Trump administration's tariffs marked a turning point, with China retaliating in kind. Suddenly, decades of economic integration were threatened by new barriers and escalating rhetoric. The era of uneasy partnership ended, replaced by open rivalry and strategic competition. Trade talks became battlegrounds, and both nations began to view each other as adversaries rather than partners. The tariff wars of the late 2010s and early 2020s set the stage for today's high-stakes standoff. Businesses and workers on both sides felt the impact, as uncertainty rippled through global supply chains. Both nations now seek leverage, and the world economy hangs in the balance. Every negotiation, every policy shift, sends shockwaves through international markets, affecting millions of lives far beyond their borders. The roots of today's crisis run deep, shaped by decades of ambition and mistrust. As the story continues to unfold, the world watches, knowing that the outcome will shape the global order for generations to come. The current truce between the US and China is fragile, set to expire soon, and the world is watching with bated breath. Both nations are locked in a high-stakes standoff, with tensions simmering just beneath the surface. With both sides entrenched in their demands, compromise seems elusive. The atmosphere in negotiation rooms is tense, as each delegation stands firm, unwilling to show weakness. China wants US tariffs lifted. For Beijing, removing these barriers is essential to stabilizing its economy and restoring confidence among its exporters and manufacturers. Meanwhile, Washington insists on curbing China's state-driven industrial policies, arguing that unchecked subsidies and government intervention distort global markets and threaten American jobs. The Trump administration's new investigations into Chinese robotics and machinery signal that escalation is always possible. These probes are a clear warning that the US is prepared to take further action if its concerns aren't addressed. US officials remind Beijing of its reliance on American technology, hinting at targeted economic pain if talks fail. The threat of restricting access to critical tech looms large, adding another layer of pressure. The impact is already severe. US agricultural exports to China, especially soybeans, have collapsed, devastating American farmers. Rural communities across the Midwest are feeling the pinch, with livelihoods hanging in the balance. Technical talks continue, but major issues remain unresolved, and the fate of deals like TikTok hangs in the balance. The uncertainty is affecting businesses and investors on both sides of the Pacific. These low-level negotiations are a faint hope for progress before the looming deadline. Every late-night session is a race against time, as negotiators scramble to find common ground. The world waits to see if diplomacy can avert another round of economic warfare. Global markets are jittery, and investors are bracing for potential shocks. The stakes are immediate and global, with every move watched closely. From boardrooms to trading floors, the uncertainty is palpable. Will this be a breakthrough or the calm before another storm? The answer will shape the future of global trade for years to come. Nowhere is the trade war's impact more personal than in rural America. U.S. farmers, once reliant on China's vast market, now face a crisis as soybean exports collapse. Family farms and entire communities are at risk, with local economies unraveling and political loyalties tested. The administration's proposed bailouts offer little comfort, seen as a temporary fix for a deep wound. The ripple effects are everywhere. Equipment sales drop, grain elevators sit empty, and small businesses struggle. The promise of a better deal is wearing thin, replaced by resentment and uncertainty. Even consumers feel the pinch, as tariffs subtly raise prices and disrupt supply chains. In a globalized economy, the pain of a trade war is never contained. Amid the standoff, two major deals have become bargaining chips: a massive Boeing aircraft order and the fate of TikTok. Securing the Boeing deal would boost U.S. manufacturing and jobs, while China uses it as leverage for tariff concessions. The TikTok saga, resolved by placing U.S. operations under American control, is framed as a national security win for Washington. Both deals highlight the strategic tools each side wields: market access and technology. The timing of these agreements is closely tied to broader trade negotiations. For China, the Boeing order signals willingness to cooperate on its terms. For the U.S., the TikTok deal is a rare victory in the tech rivalry. These transactional wins don't resolve deeper mistrust but show that deals are still possible. The underlying tech and trade tensions, however, remain unresolved. The U.S.-China conflict is shaking global markets, sending shockwaves through stock exchanges from New York to Shanghai. Investors are reacting to every new headline, and volatility has become the new normal. This standoff is forcing countries to rethink alliances and reconsider their place in the global economy. Governments are holding urgent meetings, weighing the risks and opportunities of shifting allegiances. Uncertainty has slowed investment and job creation worldwide, as businesses hesitate to expand or hire in such a turbulent environment. Many companies are delaying major decisions, waiting to see how the situation unfolds. The OECD is warning of more pain ahead, predicting that ongoing tensions could drag down global growth and increase the risk of recession in vulnerable economies. The EU is striking new trade deals and defending its industries, working to shield its economy from external shocks and maintain its competitive edge. At the same time, Europe is hedging against over-reliance on both the US and China, seeking to diversify its trade partners and supply chains. Nations like India and Vietnam are scrambling to adapt, seeking new partnerships and trade routes to keep their economies growing. They're investing in infrastructure and negotiating with new allies. Canada, too, is deepening ties with both powers, hedging its bets and looking for ways to stay competitive in a rapidly changing world. The era of a single, integrated global supply chain is ending, replaced by regional blocs and shifting alliances. Companies are redrawing their logistics maps, and governments are encouraging local production. Countries must now balance economic interests with security concerns, as national security becomes a key factor in trade policy and investment decisions. Leaders are making tough choices in a fragmented world, weighing the costs of decoupling against the risks of dependency. The ripple effects are not just economic, they're geopolitical, as military posturing and diplomatic maneuvering intensify alongside trade disputes. These changes are redrawing the map of global influence. Every new trade deal or tariff shifts the balance, testing old alliances and forging new ones. The stakes are higher than ever, and the outcomes will shape the world for years to come. The world is entering a more complex, unpredictable trading environment, where agility and resilience are essential for survival. The US-China rivalry is reshaping the global order, creating new winners and losers, one deal at a time, as nations and businesses navigate this new era of uncertainty. As the tariff truce deadline nears, experts agree. A quick fix is unlikely. The conflict now spans technology, security, and global leadership, not just trade. Most expect a new normal of ongoing competition with only temporary pauses. The best-case scenario may be another truce extension. The worst, a new round of tariffs and market turmoil. Domestic politics in both countries add pressure, with leaders wary of appearing weak. Businesses and investors are advised to build resilience, diversifying supply chains and preparing for a divided world. The era of frictionless globalization is over. Navigating this new landscape is the challenge of our time. The US-China conflict has reignited debate over the dollar's future as the world's reserve currency. The dollar's dominance gives America financial power, but weaponizing it through tariffs and sanctions may accelerate moves away from it. Alternatives like the euro and yen face their own hurdles, and China's yuan isn't ready for prime time. Still, the trade war is prompting countries to seek ways to bypass the dollar, especially as the US uses its financial system as leverage. This shift won't happen overnight, but every new sanction or tariff chips away at the dollar's supremacy. The real risk is a gradual erosion, not a sudden collapse. If the US is seen as an unreliable steward, a multipolar currency world could emerge. The long-term health of the dollar depends on trust and stability, not just economic might. The outcome of this conflict may shape the global financial system for generations. We stand at a turning point. This is more than a trade dispute, it's a struggle reshaping the world. The choices made now will set the course for decades, affecting farmers, businesses, and global stability. High-profile deals like Boeing and TikTok offer hope, but don't resolve the deep divides. The weaponization of economic policy risks undermining American influence and fragmenting the world order. Leaders must find a balance between competition and cooperation to avoid a zero-sum future. The story of US-China relations is the story of our collective future. The outcome depends on the choices we make. Passivity is not an option. Can competition and cooperation coexist, or is a great decoupling inevitable? Join the conversation.